Is it possible to pay no tax at all? For most, tax is a responsibility. Tax refers to a specific amount of fee the government charges to the people. Taxes are required for the government to raise revenue that will be used to build infrastructures like roads, highways, bridges, hospitals, and other vital facilities the public needs. It is also needed to pay for other significant government projects. It may hurt that a large amount of your income goes to taxes. Imagine you've earned $100,000 for this year. Your income tax will be 24% according to the law. A hefty $24,000 will go to the government. Without that tax, you could have used that money to pay for a new car. But if taxes are a responsibility, how do the rich pay little to no taxes at all? Elon Musk, one of the world's richest, just paid $70,000 in taxes between 2015 and 2017. In 2018, he did not pay any tax at all. Despite being estimated to have $152 billion in net worth, people who earn less than him pay more tax. Businessmen and rich people like him like to avoid tax as they think they deserve all the earnings they worked hard for. So how do they avoid taxes? Is it really possible to pay no tax at all? In this video, we will share how to avoid or reduce your taxes. Just a quick reminder, tax evasion is different from tax avoidance. Before we begin, don't forget to subscribe to Money and Mind, a fun and friendly channel that will bring you high-quality financial advice towards happiness and success. Now, let's hop right into the video. First, find tax haven countries. International companies often enjoy tax havens, so you might think, what are tax havens? Tax havens are places that do not deduct any tax, such as corporate and income tax from people or companies. What international companies who operate in other countries like Apple or McDonald's mainly report and recognize more of their income from other countries? Tax havens like the Cayman Islands, Faroe Islands, and Greenland do not deduct corporate and income tax. Therefore, if the company reported $10 million of income from those countries, instead of paying a 35% tax or $3.5 million, the company gets to pay nothing, as the country does not have any income tax. They can keep all of the income to themselves. Second, list it as a company expense. When you run a company or a business, there are indeed expenses. And of course, it is unavoidable. The only thing that you can avoid at least is paying taxes. Companies and businesses have operating and overhead expenses. Expenses like payroll, rent, utility, production, and many more. Do you know that owners use this to avoid paying heavier taxes? What they do is they list expenses like travel or company car as a company expense. Let's say the company earned $1 million in income for the year. They will list $600,000 as a company expense. Instead of $1 million, only $400,000 will be taxed. Lower income results in lower taxes, although most of the time, it only applies to company and business owners and not to individuals. Third, put your company's losses in the spotlight. Not all companies and businesses become successful. But for them to be successful, it does not take weeks or days. It takes years or even decades worth of work. During those years, there will surely be losses as the company or business has not taken off or become successful. Like listing it as a company expense, you must put your company's losses in the spotlight. Show that your company has incurred losses so that the taxable revenue or income will be lessened as well. Now, before we continue, can you do me a favor? Subscribe to our channel, and of course, don't forget to like this video and share to your friends. Okay, let's continue with the video. Fourth, offer more stock choices. When more stock options are offered to shareholders, it is counted as a company expense. Expense means reducing tax, and it does not show as a company loss. It will show that the company has more expenses while maintaining a great spot. This trick will also help incentivize shareholders, thus resulting in increasing the stock price. Giving incentives to shareholders will motivate them to find ways to improve the stock price. Fifth, avoid income tax. There are two major taxes that a taxpayer should pay, and these are income and federal tax. The state mostly collects income taxes while you are living and working, while the federal government collects federal taxes. Federal taxes are unavoidable, although income taxes are. There are states in the US that do not collect income tax. States like Washington and Nevada do not collect income tax. So it is good that you start looking into your options for moving to these states. Sixth, real estate is like long-term tax breaks. Not only can real estate bring you income through rentals, but it can also serve as your long-term tax break. Investing in real estate is always a good option. When you buy real estate, it appreciates in value, right? But in a finance perspective, it depreciates. The reasons are operation cost, maintenance, miscellaneous fees, repairs, and more. So before it appreciates in value, it is also an excellent option to sell it. Of course, selling it has taxes too. A way to avoid that tax is by using the 1031 exchange. It is where you buy a new property that is the same value as the one you sold in a specific period. And finally, start setting aside for retirement. Another way you can lessen tax is by opening an IRA. An IRA, or individual retirement account, will help you save up money for your retirement while paying lower taxes. If you earn $400,000, you would probably have to pay 37 to 40% in tax, or $160,000. To lower that tax, you can start saving up in your retirement account. At the time of your retirement, when you will withdraw your funds, you will probably pay lower tax at the time. It is essential to note that the basis of the tax bracket will be from the amount of your earnings, and the deduction will be from the money you saved. Taxes may be important for the country, but reducing your tax is not bad. You also need to get the most out of your hard-earned money as you deserve it. And there you have it. It truly is possible to reduce your tax. Again, tax evasion is different from tax avoidance. What can you say about our video? Comment your thoughts down below, give us a thumbs up, and subscribe to Money in Mind. Of course, stick around as we've got more content on financial advice coming very soon. Take care, and we'll see you in the next one.